So the market is still extremely overvalued, and don't believe the propaganda. And that's what it is. When you're listening to an analyst on a lot of these popular financial shows, or the mainstream Wall Street firms, you're not getting investment advice. You're getting propaganda. These firms are trying to sell you stocks. Their real clients, their banking clients, are trying to get rid of stock. And they hire these Wall Street firms to peddle their merchandise, and they want to get as much as they can for these overvalued stocks. So you're not getting unbiased advice by the media.
You get appointed head of some government agency today. What do you do to head off the coming disaster?
You can head it off. I mean, that's the problem. Some disasters have to happen. The problem was
we just ought to give it up right now.
Look, the mistake
we can do.
You can't head it off.
Well, look, the mistakes are made.
Reasonable or logical.
Let's talk about another factor in this economy that has helped the economy through these years. That would be the housing market. Just today, very strong new home sales figures for July. Peter, what about housing? That has been the straw that's been stirring the economic drink the last few years.
Well, I agree that our bubble economy rests on the foundation of the housing market, and it's a very weak foundation. The housing market today is very similar to the internet market of the late 1990s. And it's not going to last much longer. At some point, the lenders are going to balk. Interest rates are going to keep on rising as more and more housing supply comes on the market. Eventually, the bubble's going to break.
Gentlemen, thanks for being here. Peter, I want to start with you. Although there are more and more people saying that the U.S. economy will be in a recession next year, it is still a minority position. Why do you think that a recession is coming, and just how bad is it going to be?
I think it's going to be pretty bad, and whether it starts in 07 or 8, I think is immaterial. And I also think it's going to last not just for quarters, but for years. See, the basic problem with the U.S. economy is we have too much consumption and borrowing and not enough production and savings. And what's going to happen is the American consumer is basically going to stop consuming and start rebuilding his savings, especially when he sees his home equity evaporate. And when you have the economy 70% consumption, you can't address those imbalances without a recession. Rather than the recession being resisted, it should really be embraced, because the disease is all this debt-financed consumption. The cure is that we stop consuming and start saving and producing again, and that's a recession. And sometimes, medicine tastes bad, but you got to swallow it.
Art Laffer, you hear him? He says the consumer's going to slow down in order to rebuild the savings, and you know that 2/3 of the American economy is driven by the consumer. Do you believe that?
No, I don't believe any of it whatsoever, Michelle, excuse me, but what he's saying is that savings is way down in this country, but wealth has risen dramatically. The United States economy has never been better shape. There is no tax increase coming in the next couple of years. Monetary policy is spectacular. We have freer trade than ever before. And not only that, but there are no incomes policies things here. I think Peter's just totally off base, and I don't think it's going to be, I just don't know where he's getting his stuff.
Well, one of us is off base, but it's definitely not me. It's not wealth that's increased in the last few years. We haven't increased our productive capacity. All that's increased is the paper values of our stocks and real estate. But that's not real wealth, no more than the NASDAQ was wealth. When you see the stock market come down and the real estate bubble burst, all that phony wealth is going to evaporate. And all that's going to be left is all the debt that we accumulated to foreigners.
Peter, I'm going to take a bet with you on this one. I'll bet you a penny on this one that if you'll sign a letter saying that if you're wrong, you'll sign a letter that you were wrong to me in this, but you're just way off base. There is nothing out there that tells us we're going to have a nice slowdown, but it's not going to be a crash.
All right, let me ask you this.
I'll bet you a lot more than a penny.
Peter, what do you say?
Well, today's home prices are completely unsustainable. They were bid up to these artificial heights by a combination of temporarily low adjustable rate mortgage payments, by a complete, absence of any lending standards, and by speculative buying. And what's going to happen in 2007 is a lot of these artificially low ARM payments are going to be reset upward. You're going to start to see both the government and the lenders reimposing lending standards and tightening up on credit, and you're going to see a lot of the speculative buyers turn into sellers, and these sky-high real estate prices are going to come crashing back down to earth.
First of all, I have no idea what Peter Schiff is talking about. I agree with Tom. I think they're going to be probably up to about 10%. What artificial lending standard are you talking about?
What's word to Peter?
Most of the profits that people have in real estate are going to vanish, just like the profits in the dot-coms in 1999-2000. It's a fantasy. People can't sell their house. The inventories are exploding all over the country. Houses are on the market for 6 months a year. There's no bidders. The price is going to fall through the floor. You guys are deluding yourself.
We heard it.
Think otherwise.
I do think that the economy is a lot stronger than my counterpart, I think that that's one of the problems that we're having right now, is that the Fed is giving mixed signals as to what's going in the future, and that's what's causing the downward shift in the markets. I think you're going to see a volatile market, but I think you're still going to see a strong economy going through the year, and you're still going to see positive numbers at the end of the year.
But Peter, you're thinking that the path of least resistance is perhaps for the markets to go up, but that won't be the case for the entire year.
Right. And even if the market goes up, I think, again, it's only going up in terms of a depreciating dollar. It's not really going up in real terms or adjusted for inflation. But ultimately, as I said, there's a lot of optimism, and that's a warning sign. I think the market's going to run out of steam and eventually turn lower.
Do you see a recession?
I do. I mean, I see a very severe recession. It's not going to be measured in quarters. It's going to be measured in years. There's a very good chance the recession will start in 2007.
Foreigners around the world have been lending us money for years. They're now finding out that we can't afford to repay. This is going to be an enormous credit crunch. The party is over for the United States. We cannot continue borrowing to live beyond our means and consuming foreign products. It's
you must
over.
Be a laugh right at a party.
Huh? No, I'm pretty fun at parties. Okay. I don't just talk about this. The dollar's down.
But subprime is tiny. Subprime is a tiny blip.
It's not tiny, and again, it's not just subprime. It's the entire mortgage market. Right?
All right. Well, Tracy, you're disagreeing with.
Simply wrong. Well, you're simply wrong about that.
No, I'm not.
Charles, you were just speaking. What do you think?
I think volatility is going to be here until we can look at the books of major financials, so that means until the next round of earnings, but I think the worst is over.
Ben?
Well, I think stocks will be a heck of a lot higher a year from now than they are now.
Tracy?
Yeah, but we have more volatility to go, at least through September.
Stuart?
The big banks, the central banks, still have plenty of big guns to fire. They'll fire them when necessary. The worst is over.
Peter, I guess razor blades are in order?
The worst is yet to come. The fundamentals are not sound. They're awful. If the fundamentals were sound, we wouldn't be having these problems.
No, that's not true. For the last 5 years, we've had the best housing boom for the last 5 years that we've had in the history of housing.
Look at all the home builders today. Almost every home building stock made a new 52-week low. These stocks are down 80-90%. Many of them are headed for bankruptcy. These builders overbuilt. They misread the market. These numbers mean nothing. We're still closer to the top in the housing market than the bottom. We've got a long way to drop. Prices are going to fall substantially, particularly in California, in Florida, in the Northeast.
All right, how much further drop, Peter?
We're going to wipe out all the gains that took place from 1999 till the peak, and I think housing prices in the bubble states are going to be below where they were at the beginning of the decade.
I mean, the economy is going to crash. That's why I wrote that book. The problem is the bailout ultimately is going to make the problem worse. The politicians have to, resist the temptation to do something, because they've already done enough damage. And we have to remember, they caused this crisis. It was the most irresponsible monetary policy in U.S. history, together with the moral hazards of Freddie and Fannie, that allowed American citizens to borrow trillions of dollars and spend every penny. Now we can't pay the money back, and so the institutions that loaned all the money are naturally going broke. But we have to let the market function. We have to purge these malinvestments from our economy. If that means a lot of failures, a lot of bankruptcies, so be it. If the government tries to artificially prop it up, we're going to create a much bigger crisis down the line, because they're going to destroy the value of our currency. And then we're going to have a real economic crisis that's going to make this look like a Sunday school picnic.
The dollar showing signs of weakness today, dropping against most major currencies. The big activity we saw in the euro and the pound. But as we look to 2009, is there a concern about a run on the dollar? With us now is CMC contributor Andy Bush of BMO Capital Markets, and Peter Schiff joins us again. Euro Pacific Capital is back. And Peter, let's just get into this quickly before we go into the overall picture for next year. Let's get your investment strategy for 2009. Lay it out for us.
Yeah, well, I've been running from the dollar for years, and I think pretty soon it's going to turn into a stampede. It's not just going to be me, it's going to be everybody on the planet.
So where do you put it? You're running away from dollar. What are you doing?
Well, you see, inflation is not a problem for the future. It's a problem right now, because the government is creating inflation to pay for the bailouts. So if people don't want to get stuck with a bill, right, they don't want to have the currency that's being inflated away, which is the dollar. So they have to invest outside of the United States.
Peter Schiff, take a whack at it. Big story today, $1 trillion deficit as far as the eye can see.
Larry,
give me your take on this.
What I don't like about it is the spending. I don't like government spending. I don't care if we're in a recession. Government should be cutting back. We should not be increasing government spending. Government should be cutting its spending. If we can cut spending enough, then maybe we can cut taxes.
But if we just cut taxes and the government keeps spending, the real cost of government isn't what it taxes, but what it spends. And if it doesn't take it from us honestly through taxes, it's going to do it dishonestly by creating inflation. And that is exactly what they're doing. And we're going to pay for this, not in the future, but right now.